Good evening, and thank you for joining us on the program. I'm Temple Ashaju. It was a week packed with so much activities, and of course, we had so much stories actually to give you. So let's get down to the review by launching the show with some news making the rounds in the world of the capital markets. We'll start with this particular one. The National Industrial Court in Abuja this week asked that the suspended Director General of the Securities and Exchange Commission, Mr. Munir Gwazo, be reinstated and all his entitlements paid in full. The suspended SEC chief was removed from office in November 2017 by the former Minister of Finance, Mrs. Kemi Adeosun. The court also declared that the administrative panel of inquiry set up by the former finance chief on Mr. Gwazo was biased and partial, setting aside the panel's report. Last month, an Abuja High Court also dismissed charges of 115 million naira fraud brought against Mr. Gwazo and a former executive commissioner of the SEC by the ICPC. Meanwhile, the Securities and Exchange Commission on Friday directed the resignation of the Board of Energy Company, O&O, and bade the group CEO, Mr. Wale Tinubu, and his deputy, Mr. Omomafe Boyo, for 5 years. Now, this comes after the SEC concluded investigations into reports of alleged serious infractions, including false disclosures, market abuses, false financial statements, irregular approval of directors' remuneration, and other violations by the board of the dual-listed energy company. The regulator further says that other aspects of the investigation with possible criminality will be referred to the Nigerian Stock Exchange, the Federal Inland Revenue Service, Corporate Affairs Commission, and other appropriate prosecuting authority for further actions. And the Commission also orders the convening of an extraordinary general meeting on or before July the 1st, 2019, to appoint new directors. And still on O&O, the management of the integrated energy firm has said in a statement released few hours after the SEC's announcement that it will take all legal steps to protect itself and interests. O&O explains that the alleged infractions and penalties are unsubstantiated, while it has not been given opportunity to see, review, and respond to the forensic audit reports carried out by accounting firm Deloitte & Touche. The company further explains that it reserves its right to take all legal steps to protect its business and assets and remains committed to acting in the best interest of its shareholders. Meantime, the chief executive of O&O, Mr. Wale Tinubu, had earlier told the media in April 2018 during the commissioning ceremony of the office complex that his firm is encouraged by the audits being launched through Deloitte & Touche. Mr. Tinubu said at that time that he is positive about the outcome of the investigations.
Well, I don't know whether you call it storm. I don't know which storm you're referring to. As far as we're concerned in Rwanda, there is no storm. There's an audit which we encourage. We're very happy it's going through, and we know that there will be really no issue. We feel that every shareholder should have a chance to be inclusive, to understand what the company is made of, what the range of assets are, to actually participate in the governance structure, because the company laws allow you to do that, and also to participate not just in governance, but in also supporting the company towards providing a better return for each and every shareholder.
Well, this is another story on MTN. Listed mobile telecoms operator MTN Nigeria, now PLC, says it has paid the final installments of 55 billion naira in relation to the 2015 SIM registration fine to the Nigerian Communications Commission. In a notice posted on the website of the Nigerian Stock Exchange, the telco explains that the payment was consummated on May the 24th of 2019 and completes the negotiated settlement of 330 billion naira agreed with the NCC. Well, quickly, let's take a look at how the market ended for the week, beginning with equities, which is stocks, of course, that gained some 0.61% this week. We see the key benchmark indices settling at 31,069.37. with a market capitalization that came closing at 13.685 trillion naira. Activity level this week was also high. We saw volume at 1.082 billion, valued at 18.11 billion naira, while deals settled at 16,400. In terms of the sectoral performances, basically all the sectors closed in green, with the banking segments shooting up by some 3.94%. The consumer goods side of things was up 1.31%. The industrial goods segment, given the gains we saw around WAPCO and, of course, Dangote Cement, rose some 1.30%. While the insurance side of things was positive as well, 3.28%. Oil and gas shot up 2.14%. And for the unlisted securities markets, we've got that's settling in the Southward Territory this time, down some 17 basis points to close at 748.62, with a market capitalization that moved away from 538 billion naira to 537.84 billion naira this week. We got volume at 34,534 with a value of 3.97 million naira. And for the fixed income side of the market, bonds for this week was mixed. We got yesterday, 23rd of February 2028, security trading at 98 naira 27 kobo after some 18.60 billion naira was actually exchanged on that counter. But basically, total deals for yesterday was 36 and valued at 43.65 billion naira, representing some kind of a bullish sentiment there yesterday at the secondary side of the market. The treasury bill side of the market also recorded some gains. We saw total deals at 120 and for a total value of 46.43 billion naira. Investors moved, of course, across the short, the mid, and of course the long end of the curve. Lest we forget that President Muhammadu Buhari was sworn in for the second term of his 4 years this week. The capital market community sure has some expectations, high expectations, on the next 4 years of his administration. And joining us now to discuss this is the Chief Executive of Kairos Capital, Mr. Sam Chidoka. Thanks a great deal for joining us on the program.
Thank you for having me.
Welcome. So you certainly have your personal expectations. Can you launch that on the show? Let's hear.
So first is to congratulate the president on winning a second term and being sworn in a second term for presidency. But in the capital market family, we have a lot of expectations for the next 4 years. And part of it being, I'd like to start with what I call structural issues that we think needs to be addressed very quickly. Right. So if we start with, for instance, the apex regulator, the SEC. As at today, the SEC doesn't have a board. I think it's important that the president very quickly appoints a board for the SEC, put it in chairman and put other members of the board so that decision making can be faster. Remember that part of the issues we've had in the capital market is time to market. And if you don't have a board, issues that require board approvals, what they do now is to go to the minister. But if you have a board, then it's easier to take some of those decisions without going to the minister who has other things to take care of. So I believe structurally, the SEC board has to be put in place. Also, we've been mulling with the issues of amending the ISA, the Investment and Securities Act of 2007. It's now 12 years. A lot has changed in the market. The market is dynamic. The market is not static. And so we need to be up there with other economies and other markets. As they move, we need to move in the same direction. So that act needs to be amended. That falls on the purview of the National Assembly. I know the 8th Assembly has done some work on it. As the 9th Assembly comes, we're hoping that they'll finish that work and that the president will assent to that amendment very, very quickly. Same thing with CAMA. We know that there's been some amendments of that also, and that has been with the president, and it's important that the president signs that very quickly. So those are some of the structural issues. Another structural issue that we see that needs to move very quickly, which might not be on the purview of the president, is the issue of the demutualization of the Nigerian Stock Exchange. So the president has signed sometime late 2018, but the process is still ongoing. That's a process that needs to conclude very quickly, because once that happens, what it does is that it unlocks value, especially for the stockbroking segment of the market. Because now the exchange itself becomes a listed company listed by shares. They can sell their shares. So their balance sheet immediately turns around. Many stockbroking firms are struggling at this point in time. So if this happens, it helps their balance sheet. They get some money in, and they're able to employ more people, and it aids all that is happening. So structurally, we think that the government needs to move very quickly. We're hopeful that this time around the president will appoint ministers sooner than later, and that people begin to work on some of these issues that are available. Once the National Assembly is there, the ministers are there, some of these bills can be amended. Then also you now come, apart from the structural issues, there are issues that have to do with like ease of doing business. So the government has done a few things in ease of doing business in the last 4 years, but we need to push the needle on that. Right. We need to do a lot better. Part of that, a subset of that is time to market. So you find that you're talking to a client and you're telling the client about the fact that the capital market is a place for long-term funds and cheaper funds. But you're 6 months, maybe 9 months away from time to market, from closing that transaction. Meanwhile, the guy needs the money yesterday. So what does he do? He goes to the bank. And in 5 days, he gets a loan from the bank. It's more expensive, but time value of money. He needs to open some LCs immediately. He needs to set up his factory. He needs to jig up his working capital immediately. So he's not going to wait for the time it takes in the capital market. So that needs to change. And for that to change, there needs to be a board for the SEC. The SEC itself needs to do a lot better. We, the operators, also have to do a lot better. Even those issuers in the market have to. So it's a potpourri of everybody working together to make it better. Government, the decisions government have to take, they need to take those decisions today. Every day that passes, somebody loses money.
So, well, you talked about time to market. Is it a question of automating the system, the process at the regulatory side of things, or what?
So, part of what we need to do is to further make the market less retail. So, if you look at time to market, you're looking at it from the view of when you start the transaction, to when you file at the SEC, to when you get approvals, and when you can go and distribute. Now, if the market is more skewed towards high net worth and informed, qualified institutional investors, the review that the SEC has to do becomes less. Because you're selling a paper. Imagine if I'm selling a paper to a PFA. It's assumed that the PFA will have an informed seller and an informed buyer. So the intermediation, remember, SEC, one of their cardinal rules is protection of shareholders, or protection of buyers of the capital market. But when you have people who are informed buying these papers, the intervention of the SEC would definitely be less. So I know that as part of the work being done by the executive of the Association of Issuing Houses, we're working with the SEC to enter into a new framework where you just file and launch. So they have a checklist. Is this there? Done. Is this there? Tick, 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 tick. Once that is done, then you launch into the market. But that needs to happen very quickly.
So you still need the boards to give approvals to
you
such a
need
thing.
Everything. So the board has to be in place to give approvals where it's required. If they need a board approval, they don't need to wait for the minister who's tackling. The Minister of Finance has so much to do. And that's why the framers of the Constitution and our laws have put in a board at the SEC and giving them certain powers. So if you don't have the board in place and they always have to go to the minister, then sometimes you have delays. But I think that time to market is something that is important. I remember that in the ease of doing business, there was something that came up the last time about the SEC and the CAC. So usually when you file documents with the SEC, you need to file CAC certified documents. And the idea was to give the SEC viewing rights to the CAC in such a way that you don't have to go through that hurdle anymore. So they just stay in their office and log in on their computer. They can see if those documents are authentic documents from the CAC. And then that saves you a lot of time. Technology is meant to make our lives easier, better, faster. But if we don't adapt, then we keep on going around the same circle.
I guess it is something that the PEBEC basically, and of course the minister in charge of the ease of doing business and all of that, special advisor will be factoring in, because they also visited the stock exchange a few months ago. So let's talk about the ISA, the Investment and Securities Act 2007, which you also touched on. Is that the path that we need to be reviewing now, or we basically need more rules and regulation around some new initiatives that have actually, permeated the market?
So SEC derives its laws from the ISA.
Okay, great. So let's take this short break. We'll come back and, of course, we'll continue the conversation around this particular matter. Welcome back to the program. It's Capital Market here on Channels Television. But before the break, we started a conversation on the expectations of the capital market community from President Muhammadu Buhari's second term. And our guest has been Sam Chidoka, the Chief Executive at Kairos Capital. So before we went on break, we were to look at the ISA 2007 and the need for rules and regulation around some new initiatives, some latest initiatives in the capital market space. For example, we've got crowdfunding. I'm not sure there's rule for that in the market. Climate financing, we talk about that these days, but do we really have rules for that? So should that be an area that the SEC should be channeling its efforts to, or it's the ISA as a whole?
So the SEC derives its powers from the ISA, but also the ISA does something. It gives the SEC the opportunity and the powers to make laws, their rules and regulations. So in as much as you may not have specific mention of those things in the ISA, the SEC has the right to make certain rules and regulations pursuant to the ISA.
Okay.
But it's important to update the ISA itself. I mean, 12 years is a long time. We're in this dynamic world that we're in, where things are changing based on technology, based on new advancements, based on new ways of doing business and funding and all of that across the climb, across the world. We can't have an ISA that was last looked at 12 years ago. It needs to be amended.
Okay, so let's look at a privatization program of the federal government at this point. We know that, of course, the SACO was listed on the stock exchange a few months ago. The DG of BPE, Dr. Alex Oko, actually, hinted that another company should get on board by September or thereabout. He actually said there were 4 companies in consideration. One is already listed, one to come again this year, so 2 more perhaps before around 2020. What are your thoughts on this?
So we think personally, I think that that's the way to go. I think that government, I'm a staunch believer that government has no business in business. I think that government should regulate and let businesses run. If you get the privatization done properly, then those companies can have the efficiencies of the private sector. And you as government, you can regulate. If they go out of the way, then you can sanction, you can fine, you can pull them back to say this is the right thing to do. But I think it's important that government looks at the way the privatization, the way concessions, the way advisory work is done at government agencies. So I'll give you an example. So a government agency now wants to do a deal, wants to sell, let's say, a government asset or a company. Sometimes what they do is to say that you could come as a consortium. That consortium should be made up of a foreign advisor and a local advisor. So what usually happens is that the foreign advisor has the uptake in that relationship. So whatever the fees are, the foreign advisor earns more fee than the local advisor. We would like to see that change. We'd like to see a situation where we make laws in Nigeria. Remember that these are Nigerian assets owned by Nigerian government, being privatized by Nigeria, so Nigerians should lead the way. So we should have the local advisors go and bring a foreign counterpart. Not the foreign, bring the local. So that way you switch the relationship because your government is going to pay fees. So if the local advisor is the one that goes to the foreign advisor to say, come and ride with me, let's advise the government on this. Then your negotiating power, you will have a higher hand in negotiating power. Then you can trap the receivables, the fees that will come from it. Then you are better off. Then you can employ more people. Then unemployment is fought. Then government is growing the economy by trapping the funds here. But if the reverse, what happens now, where a foreign counterpart takes more than 60% of the fees, that's capital flight.
Capital flight.
They're going to get those fees, change it to their currency, and take it back home. So that needs to change. And very importantly, I think that government has to look at concessioning as a means of funding infrastructure. So the major roads, the bridges you want to build, find partners and concession those roads and those bridges. What would happen is that the people you concession it to will need to raise capital. So they will employ the services of advisors in the capital market. When they employ their services, they'll pay them fees. When they pay them fees, they make more money. When they make more money, they can employ more people. So you're dealing with the issue of unemployment and you're stimulating the economy by doing that.
And that creates more liquidity. I think I agree with you a lot on that. Well, should we also drag in the issues of JVs, this whole JVs cash calls that we have in the oil and gas sector into this whole privatization thing and get all of this also listed or tradable somehow on OTCs or even in the exchange?
Yeah, sure. Nothing stops us. I mean, the NLNG model works. So nothing stops us from doing that. Nothing stops when government is involved in a JV and they say, okay, as part of the process of having this JV is that we're going to have this JV at some point listed in such a way that it can do business on its own. You know, we talked earlier on about the demutualization of the stock exchange. So if you do that, it becomes a private company, it becomes more efficient, it can do business on its own, the turnaround time is faster, and all of that. Same thing with the JV. So the issues you have around cash calls, those issues can be resolved around the capital market also. The point is that now we have the funding side taken care of. Since we started the contributory pension scheme, the funding side is taken care of. We have about 9 trillion naira revolving around that pension market. That's a lot of money. Yes, a lot of it is borrowed to the government through government bills and all of that. But you see, in that transaction, where government is issuing treasury bills and bonds and CBN is doing OMO, the fees being paid is just a placement fee that the CBN pays and DMO pays. But if you structure those transactions in such a way that you do concessions or that JVs are funding through the capital market and they need advisors, when they get those advisors, they have to pay them fees other than placement fees. And that helps you to expand the market. I think that the thinking of government should be, how do we get the capital markets to become a veritable tool to funding infrastructure, to funding the budget deficit, to providing employment, to helping to stimulate and rejig the economy, and to help to diversify government revenue. Because the more money people in the capital market make, the more taxes they pay. If our tax collection today is less than 5%, if you're not making money, there's no tax to be paid. So we have to find a way to stimulate the private sector, especially in the capital market. And in the next 4 years, we expect that the government will take specific, targeted, and deliberate steps to make the capital market more buoyant.
So you talked about demutualization of the stock exchange too. It's something that we understand the National Assembly has actually passed it. We're not too sure if it's been assented to by the president or not, but I understand from a statement made some time ago by the president of the Council of the Nigerian Stock Exchange, Mr. Abimbola Agunbambo, saying that it needs to be gazetted and all of that. Basically, what will be the benefits, the advantages that the markets will be able to get, given the year-to-date performance that we have right now in terms of the indices of the market and all of the key lines of the markets?
So if that happens and you have the Nigerian Stock Exchange as a company limited by shares, what generally happens is that they will have a board, they'll have management, they'll have shareholders. The board and the management becomes answerable to the shareholders. They need to do business in a different way. They are not for, presently, the exchange doesn't have to make profit. But if you demutualize, then the exchange becomes a company that needs to make profits for its stakeholders. So that forces management to think like a business and to seek to do business in such a way that they make money, to seek to be competitive. Because we're talking of the Nigerian Stock Exchange today, you could have another one in Abuja. You could have another exchange somewhere else. So there could be competition. So the exchange needs to sit up. So the key thing that happens is that once you demutualize, the exchange will have to become more efficient in the way they do business. Another thing that happens is that remember that the current members of the exchange, being the stockbroking family, once you demutualize, you're going to have like an offer for sale. And they're going to make money from the sale of those securities. So they're going to get some money into themselves. And that helps those companies to become more viable. And then also, when you demutualize, what you would expect is that the shareholders, the shareholders of the exchange are able to sell, other people are able to buy. So what can happen is that you find people who come on the board of that company will only come on the board because of shareholding. And when they come on board because of shareholding, they will definitely demand better service, better efficiency, better profitability from the management. If it's not happening, they can sack the management, unlike what you presently have.
Well, Sam Chidoka, CEO at Kairos Capital, it's really a pleasure to have you on Capital Market this evening. Thanks a great deal for coming through. Thank you so much. Now, well, we understand that still in reaction to the regulators' sanction on O&O, there will be a press briefing tomorrow. It's something that you should watch out for. That will be happening, of course, here in Lagos over the weekend. So watch out for it. That's it on the program for this weekend. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye.